Hi traders, welcome to this video. In this video I want to show you why it is so important to have a clear exit point. Some weeks ago I traded this stock here, Luck and Coffee, and you can see that it is today roughly 74%, or there's a drop of 74% today. So, and I traded the stock around here. So I entered around here, I exit around here, and I sold the last position here. So I'm not affected by this large drop today. The reason of the drop is not very important. The thing I want to make clear here in this video is you must have an exit strategy. And Luck and Coffee is not the only example. There are many stocks which have been on my watch list and which I traded in the past, which end as a big loser. And for every trader, it's important to have one point in your strategy where you definitely sell your position, so where you exit and ask no questions. For me, I have a very clear rule, and this is when the stock closed below the EMA 65 and starts to drop. So, for example, in that case, my last or the point where I definitely sell such a position is here, because here I have a clear close below the EMA 65, and then the stock starts to fall, and here is my definitely sell point. So I maybe held or I maybe hold the stock in that case here, but I am definitely out here in that area. So, and if you are a more long-term orientated trader, you maybe can use for example the EMA 40, which is the daily EMA 200, and if you use the EMA 40 or daily moving average 200, you are out of the stock too, because you can see that 2 weeks ago the stock closed below the blue line, which is the EMA 40 in the weekly chart, and you are definitely out. Maybe just to show you some other sell points here. Which I used, definitely this one here, this bar. You can see that this is for me a very clear exhaustion run. So the stock momentum is very fast, and the stock is running out of gas. And you can see that in the volume. If I exclude the daily bar, you can the bar from today, you can see it much more clear. You can see that the stock rallied here higher, so made a huge move higher, and then there was one gap up, and that all on lower volume and around the $50 level, which is a very clear price mark. And that's often a sign that the stock is running out of gas. So gapping up, so aggressive buying from traders, very small progress, volume is decreasing. That is the first sign for me that the stock is running out of gas, and maybe that's the first sell point, and I sold the half of my position here. And the second sell point is definitely, and this is for me an absolute sell point, was this bar here, because it was the largest volume since the IPO. This is definitely a sign for me that the stock is on the sell list of a lot of institutions, and you can see the bar here itself, it's very long, and yeah, the stock on that day lost around 25%, so this is yeah, definitely definitely a reason to sell for me. And so I sold my whole position here around that, and yeah, and if I'm if I'm a clear trend follower, for example, and then my last exit point would be around yeah, this level here, because then I have a clear signal of the EMA 65. So those rules, and they are also available in my free ebook, those rules help me to secure my capital. I personally don't want to be in a stock which gapped down 74%. And let me make one point very clear here. If you are in such a situation where a stock gapped down 74%, you can pray that your position size is not so big. The thing is, the position sizing is one secret to secure your capital. Because if you are in such a stock and you maybe have only 5% of your capital in such a stock, and you lost 75% of that, that's recoverable. You know, it's not a problem. You can come back from such a drawdown. But I'm a more aggressive trader, and if I have a position which is really, really going in my direction and I have a big conviction in that trade, I sometimes have around 25 to 30% of my capital in one stock. And really, I personally don't want to be in a situation where the stock is gapping down 75% and then I'm in such a trade. So, and you can see that the stock started to drop before the large drop. And this is yeah, this is the secret of the market. You know, the market and the sum of all traders know much, much, much more than you as a single person. That's why professional traders always say the market is right, opinions are often wrong. So, and the market itself, so the sum of all traders, they produce the trends, and maybe some insiders started to sell their position long time before, or there were some rumors or something, and that leads to this very weak price action. And I want to show you one additional secret and or one additional hint, and this is, you can see in the relative strength indicator, you can see that the stock itself lost relative strength. Here in that up move, the relative strength indicator made new highs. And then the stock started to underperform against the S&P 500. Another sell signal for me, or another signal for me to be more defensive. Okay, I want to show you some other examples, and all of those examples were on my watch list, and all of them, or some of them, not all of them, some of them, I traded by myself, and all of them lost really, really big. So another example, AAOI, Applied Optoelectronics, a very, very big winner here. You can see the stock was up around 270%, and today the stock lost 90% of its value. So, and you can see that as soon as it started to trade below the EMA 65, the price was going down. Another very famous example, TLRY, a cannabis stock. It was a monster move here, around 800%. Today, the stock is absolutely worthless. You know, this is 98%. I mean, really, if you are in such a trade and you maybe bought here, you really have a big problem with your trading account. Another cannabis stock, Canopy Growth, very the bellwether stock of the cannabis sector. Today, 75%. Lost 75%. Another one, GBTC, Grayscale Bitcoin Trust. This is a not an ETF, but a trust investing into Bitcoin. Lost 90% from the top, and today it's around 80% below the top, you know. And another one is the Ethereum trust, for example. You can see the same, you know, the same pattern here, around 86% in minus. And if you invested here in the first trading days of that trust, and you sold at the bottom here, you lost 95%. Another very famous stock, Beyond Meat. You know, everyone was thinking about this is the biggest company of the world, or will be the biggest company of the world. They have a deal with McDonald's, etc., etc. This is all worthless until the market starts to believe in the story and pushes the prices up, you know. And Beyond Meat today lost 73% from the top. And you can see that if you have a rule, for example, to sell below the EMA 65, or maybe also the weekly moving average EMA 40 or something, you always be on the right side. You know, you sold the stock and you are out of your position. You are safe in cash with that and wait for a different time, you know. And maybe just a few words, what should you do if you are in such a trade? I personally would always accept the loss, because it hurts much more to stay in such a trade and never see the trade coming back. You know, take your loss, take the responsibility for your trading action, sell the stock, and work on your rules, and maybe have a better understanding, and maybe a better trade next time. Maybe you think now, okay, these are all very speculative stocks. No, that's wrong. I mean, look at Boeing at the moment. Boeing, very big company, you know, blue chip. It lost 80% from the top, you know. Also, big blue chips can go bankrupt. That's really not a problem. Look at all European banks at the moment. They are in the same situation. And also look at other stocks like Facebook, for example. In the beginning, you know, there was a big hype around the Facebook IPO, and from the IPO, from top to the bottom, it lost 60%. Snap, another company where another IPO in a social media business lost 83%. So also very famous and very big companies are not immune against such big drops. So please, all of you guys, you must have clear rules to sell stocks. You must have clear rules where you definitely sell your position and go out of the stock to avoid much bigger damage to your equity curve. Because if you don't have any capital, you can't trade. So that's why protecting your capital is one of the most important job of you as a trader. Okay, I hope this video was helpful for you. You can follow me on Twitter, you can follow me on YouTube, and you can subscribe to my free newsletter. I give some tips around trading in my free Sunday newsletter, and I always present 4 leading stocks from my personal watch list.